Good morning, everybody. I wanted to visit with you guys about some things I've learned over the last 2 weeks that has completely changed my trading. Of course, we know about the fair value gaps. This from that wick to this wick, that's the fair value gap. We know about that, and that was a big game changer for me. If the fair value gap forms and then is respected, chances are we're going a little higher. This is on a daily chart. One of the things I've just recently picked up on is these. This is what we'd call a volume imbalance on a smaller chart. You could call it the same thing on a daily chart. But what it is a gap that from the candle bodies where they don't touch. That's an opening gap. So the red candles mean that the price opens at this top line here. Zoom it in so you can see it a little better. So the price would be, this would be the open. If you look, that's not showing it, but the open is here and the close is here. And on this candle, the open is here on the bottom on any green candle and the close is here. So what this is saying is the price opened here, traded down all day and closed right there. And that's important to notate on your chart. So we closed right here. And then our open price is right here. And what that creates is a gap. There hasn't been any trading in this area. So these gaps will typically fill at some point. They may not stay there very long. That's why it's just a wick. But see how that candle wick down into this? That's important to note. If we look at the one from yesterday, there's another gap. Those candle bodies don't overlap. So we could notate that. And each time you're notating one of these, you want to label it for the date. We want to keep at least 5 days of these on the chart. So that one would be the today. So you would just label it as a new day opening gap for 8:30. That would be today. And you can label it. You can label the high and low if you want to. But just as long as you know that those are referring to that, you can label both lines if you want to. When the gap is particularly large, you also want to put in the halfway mark. I just use a Fibonacci tool and I measure. I gotta move it out a little bit. There we go. So I can see a line. There we go. And the 50% mark is here. So you would put another line there to mark the middle of the gap. Let me get rid of that fib tool for a minute. So now we have this line, and I like to notate it with a different color. So I'll usually put red and I'll make it a dashed line. So we know that's the center point of the opening gap. Okay, so that's very important. Now, if we go to a smaller time frame, I have at times had a lot of these gaps notated. Let me see if I have them hidden. I must have deleted them all. I had them on the ES. You can see I've got quite a few lines drawn on the ES that are gaps and whatnot. But price will, a lot of times, like on this one here, traded right down to the bottom of the gap. Here it traded to the center point. They do refer. I grabbed that purple line. I wasn't supposed to. Well, it doesn't matter. That's one thing about them. When you get them on your chart and you're moving your chart around, a lot of times you'll grab a line accidentally and move it. But it's important to have those on there for sure. Now let's reduce to a lower time frame, and I'm going to show you another type of gap. At the close of day, each day, so this would be our end dog for today. When they get it on the smaller time frame, those lines, you don't know what they mean, so you can just put the other one, go ahead and label it to okay. And then the other one, I'm not going to take the time to label it right now, but this is the top portion of that one. That looks like it's dashed. It is. No. Huh. Sure does look like a line to me. It's not lining up. Okay, I'm not going to mess with it. I'm just going to, you need to annotate those on your chart. So this would be, sometimes they don't show up when I move them over here. This would be the center point of the one prior to, so from 829, we can label it as well. It's such a big one, it's important to mark it. The CE means consequent encroachment. Put 829 on it. So it's important to notate those as well. But the other one is a little more difficult to see. We have regular trading hours for the New York session, and the New York session gets a lot of volume, more volume than all the other sessions combined. And typically it'll run from 6 in the morning. So we'll just think 6 a.m. is when it starts. I don't know why I'm unable to get any of these things to change. Oh well. So 6 o'clock in the morning to 11. No. 7 o'clock in the morning to 11 is New York early session to most of the morning session has already been completed by then. But there's a lot of this movement that happens overnight. In TradingView, you can click on this electronic trading hours and you can change it to regular trading hours. Okay, and then you'll see there's gaps. And you want to highlight those gaps because they're important. What this is saying is no business has been conducted during this time. Over that overnight hours, it moved this much. And we want to do the same thing on this one. So the opening is there. Can't quite see it with it expanded that much. On a green candle, we open at the bottom and close at the top. So that's what we did here. We open at the bottom, close at the top. And then on the bottom part, we opened at this red candle at the bottom and closed at the top. This is a very large gap. And what this is saying is no business for the most volatile, most volume session, New York session, no business has been conducted in this area at all. It was all overnight movement. And the algorithm, because it's a computer program, it's going to refer to the previous New York session for its anchor points. So having this highlighted on your chart is very important. I'm going to make it a different color on the interior so we can kind of see what's going on. on there. Put some background on it. We'll make it a lighter blue just so we can see it later on. Okay, so there's our gap. And if you look at what we did yesterday, we traded up and we traded away from the gap. These gaps have a 70% chance of filling at some point, at least to the halfway mark right here. We had unemployment news yesterday and it drove it way up, but it drove it to about here. If I put in a 15-minute chart or 30-minute chart, I'll do 1 hour. Okay, these blue lines are annotating the days, the opens. But if you look at this chart here, you can see lots of gaps. We would highlight where we finished up. Let me do that little button. It'll take us back to where we are now. As you can see right here, we have a straight line on this chart on the 1 hour. And that's what the market ended up doing yesterday, was opening right here with a gap. And I've seen it do this multiple times over the last few days, and you should back test it. But there's our gap right there, and it's sizable. It starts at 19,401 and runs all the way to 19,485. That's quite a bit of movement. So we come up and we start making this straight line, and then eventually in the afternoon, the market falls out of bed and it goes and fills this gap. I've seen that happen time and time and time again since I've started putting them on the chart. And I've only started putting them on the chart in the last week. And it's really changed my profitability. Instead of just going for $250, I'm getting $1,500 wins. And this is on a micro NASDAQ. Every 100 points it moves on a micro NASDAQ is $200, just one. And I found it's an excellent way to control the risk. So that's another thing I've been doing. So we ended up trading back down all the way through the gap, meandered around. This is all Asia session stuff. And wherever the price is now, this is where we ended yesterday. So if I change this back to electronic trading hours, this is where we ended yesterday, about right here. And we have all this movement overnight. You wouldn't really even know there was a gap if you have it in electronic trading hours. Over here where we have the gap filled in, there was lots of trading that went on during the overnight session. From here, up, back down, bouncing around. But the algorithm sees it as nothing took place in the busiest session. That's why it wants to revisit. So having that opening gap, changing it to regular trading hours, annotating it on the chart, and then you can go back to electronic trading hours, because it will refer sometimes to the high and low of the Asia session. England, which occurs between 3 and 5 a.m. or 3 to 6 a.m. This is all New York time. Whenever you're doing it, make sure this little thing right here says UTC 4. My little ribbon that shows I'm recording is over the top of it, but right here it has the time, UTC 4, so it'll be New York time. So London session runs from 3 a.m. to 5 a.m. New York will start at 6. So that's a big one. The opening gap for regular trading hours is big, and then the opening gap on the daily, which we're calling end dogs. And if it's happening on a Sunday, you would call it an NWOG, new week opening gap, and date it as well. I have a lot more of them annotated over here on this chart. I'll show you real quick. Because this is the one I do my trading on. I just do my training on the other one. But yeah, this one right here. You can see if I zoom out like to a bigger time frame, I have all of these marked on the chart. It does make it busier, but they're important. So I need them. This one's not important. That's just the low of the day. But that one's not. This one right here is kind of important because that's where we bounced on yesterday over and over and over again. The thing about the Top Step program, it doesn't have the regular trading hour toggle. So the way I do it is I just look at the closing price of the previous day and I mark it in there. I had it on there, but I deleted it. But this little level right here, that's important for me, so I had to mark it. But if you can see these end dogs and end wogs, price really bounces around them a lot. This is a big one here, and this is the new week opening gap, and it stayed there, stayed here. There's another one I don't have annotated on this chart for some reason. That's right around this blue line, and price has gone up to it multiple times, but not through it. I think that's where we're going to attack today. After we get our PCE report, I think we're going to go straight up to that. And then we do have a new week opening gap right up above here that it could be aiming for as well. So you can keep an eye on that. The last thing is this little line, this little tiny little fair value gap right here that you can't even see in this time frame. But on the 1 minute, market opens, starts trading at New York time 9:30. Okay, and you want to watch at 9:30 for the very first fair value gap of the day. Let's keep on going to where I originated this thing. When you get the 1 minute chart, there's a lot of business going on. Come on, where did you start? Maybe I could shrink it down this way. There we go. Okay. Now we're getting somewhere. Hoping that's the one. 8:30 a.m. 8:35. Oh yeah, 9:30. Okay, so yes, 9:30. That's when the market opens right here on this candle. We go up, meander around, but no fair value gaps. This one's just the open candle. We don't count it. This in regular trading hours, none of these would even be here. So we're watching, and then the very first fair value gap is very small. It's right here. It forms, the market trades through it, goes right back to it. See right there? Went right back to it. The center point is important. So once you see it go through it, back to it, you would want to sell short there. Sometimes it'll push on through, but the market ends up referring to that multiple times. So very first fair value gap of the day, no matter how big or small it is, annotate it on your chart and leave it there. And when the price goes through it and back to it, see it went right right back to it right there. Through it, back to it. You could sell short there, catch a little run there. You could sell short there, catch a little run there. And where do we go after that? We went and filled that opening to the end log there. But we ended up going and filling the 50% range of the opening gap for the day. And that's mucho importante that you annotate that on your chart. Through it, and then we went right back to it. Pretty incredible stuff. So those are my nuggets. Those are the things that have really, really helped my trading. The end dogs and end logs, new day opening gaps, new week opening gaps. The very first fair value gap of the day, and the regular trading hour gap. Very important to have on your chart. This line right here on this gap, that's the midpoint. A 70% chance of it filling. If it starts to eat into this gap at all, there's a 70% chance it's going to go there. If it goes through the center point, there's an 80% chance it's going to fill. Those are very high percentages you want working in your favor. And if we pulled away from it and put up all these little points, if we've done that and it starts coming breaking down, this is a huge profit. I mean, on even one micro, I made $1,500 on just, well, I scaled in, but I had a max of 5 micros, so my risk was only $50 in the very beginning, and as I'm scaling in as we're going down, and I make $1,500. This is all paper money, of course, but you can transfer it to the real thing eventually once you learn it. That's a huge amount of movement, and it's predictable. 70%. I mean, that's, can't get any better than that. 70% chance of it going there, I'm in. So that still means 30% of the time it won't go there. So don't get mad at me if it doesn't go one day. There's still that 30% chance that it doesn't ever go. But a 70% of the time, it's going to go to at least that halfway point. And you can see on this day, we pulled away from it, and we stayed away from it for a good long while. But we came back, and then we passed it, so we did the full 80% mark. If I do regular trading hours again, yeah, that is regular trading hours. That's where we ended up ending, was right at the center point. You just have to think of it like that. No business has been conducted in this area during the New York session. I hope that helps you get over a gap. I mean, get over maybe something you're struggling with in your trading. Having those areas notated will definitely help you. Just watch how price reacts to them. It will go wick right into it. I mean, it's like that's how you know this is algorithmic. The computer is doing an if-then model. If it drops below, we want to go trade back to it, and blah blah blah. And these gaps, I mean, this is just a very small new day opening gap, and look how it just hugs it for all that time. And then when it goes above it, it comes back to it. Goes above it, comes back to it. Goes below it. Does it ever go back to it? Let's see. Not this particular day. But where did it aim to down here? Another one. New day opening gap right there. That's the end of the day. And then we trade through it. Look how it trades to that center line right there. When we pull back, it trades right to it and then goes up above. Where do we trade to? There's actually a new day opening gap right here at this blue line that I don't have annotated. We hang around the new week opening gap, which is right here in this area. New week opening gap, I make gray lines on it. But we hang around in it for a good long while, and then we break below it. The market will refer to those areas for a very long time. And then we come back up. We didn't quite make it to that new day opening gap. Almost. And now we've just consolidated. It gives you anchor points for the market to reach to. If we're going higher, where are we going to go? Is it would be reasonable to take profit here? If we're going lower, where are we going to go? It'd be reasonable to take profit here. If we've opened with a gap and we're in a short position or a long position waiting for the gap to fill, it would be reasonable to believe that it's going to go the halfway point of the gap. That's all they're there for, aim points. So instead of just trying to grab $250 on a fair value gap run, you actually have a point on your chart where you think price is going to trade. And you can hold the position knowing that it's most likely going to go there. Be kind to yourself. Be kind to one another. You know, the world's got a lot of mean people in it. I don't want you to be one of them. I love each and every one of you. I hope this really improves your trading. Talk to you soon.